Most of you know I'm an ex-rocker, so bear with me while I pull a band from my youth. Led Zeppelin's Communication Breakdown was the quintessential rock song with 2 lines of lyrics that I think set the tone for what's taking place in the communication sector this year. It's up on your screen. Every U.S. stock investor knows the communication sector has been under siege, wildly underperforming the rest of the market. 3 recent blow-ups add insult to injury: Meta, Alphabet, and Snap. All companies today face challenges of a slowing economy, rising inflation, and a born-again Federal Reserve that is determined to bring inflation under control, even if it means pushing the economy over the edge. The elephant in the room, and in this case it might be a herd, is that all 3 have founders with dictatorial control over their companies, immune to any pushback from outside players. If you're not angry about what's taking place in these megatech communication giants, you should be. Welcome to The Money Runner. I'm David Nelson. All too often, board members are little more than a rubber stamp to the commands from above. Look at China as an example. We've watched President Xi methodically push his rivals aside and now has taken a third 5-year term, effectively there for life. He now commands the most power since Chairman Mao. It was no easy task. It was a decade in the making. Meta's Mark Zuckerberg, Alphabet's Brennan Page, and Snapchat's Evan Spiegel did it with the stroke of a pen. Meta and Alphabet have dual-class share structures, including super voting shares for the founders. This blocks any attempt to challenge their leadership, regardless of the economic interest in the company. Snapchat's Evan Spiegel took it a step further, giving shareholders no rights at all. This was such a sore point that pension plans lobbied for the index providers to not include Snap in an index. They didn't want to be forced to buy a company that so blatantly stepped on shareholder rights. Facebook has 2 shareholder classes. According to SEC filings, Mark owns 13.6% of the company, but his Class B shares get 10 votes per share, giving him 51% voting control. Do the math. His stake would have to fall to just above 5% to lose it. Alphabet's Brennan Page didn't do this out of the gate, but in 2014 split the company shares with their shares gaining super voting rights, again giving them an ironclad grip on the company. Snap's Evan Spiegel took this policy to its logical end, giving shareholders no say at all. The arrogance of the above speaks to the dark side of capitalism. Dual-class share structure has been around for decades. In fact, at one point, the New York Stock Exchange outright banned it. When they started losing companies to the competition, they were forced to walk it back, reinstating companies that had gone the dual-class route. If you can get away with it, why not? They decided to shove it down our throats, and we bought it hook, line, and sinker, yours truly included. I bought these shares. Think of it this way. It's like someone selling you a house that you pay for in cash, but still has the power to come in and tell you what color to paint the kitchen. It's really part of the dark side of capitalism, and just one example of what I call the Unholy Trinity: stock buybacks, stock option grants, and of course, super voting shares. All right, let's put financials and business models aside for the moment. The arrogance of believing that you and you alone should have dictatorial lifetime control of a company you don't have a majority interest in isn't just wrong, it's un-American. If you're looking for the end game and what could go wrong, look no further than Paramount, formerly Viacom CBS. Sumner Redstone was a giant in the communication space, and between him and his daughter, Sherry Redstone, controlled 80% of the voting rights with just 10% of the shares. For most of his life, he controlled the company with an iron hand, but with brilliant success. His Paramount division put out some of the biggest movies in a generation, including blockbusters like Saving Private Ryan, Titanic, and the Mission Impossible series. In his later years, he was suffering from dementia and ceded control to Philippe Dauman, who lost $3.4 billion buying back $15 billion in company stock at much higher prices. Later that year, adding insult to injury, the board extended his contract through 2018, promoting him to chairman and awarding him $54.2 million in compensation. Yes, folks, there is a dark side to capitalism. The poster child of this my way or the highway management style has to be Mark Zuckerberg. His arrogance, along with a disregard for all voices other than his own, forced a mass liquidation shedding $740 billion in market cap since the highs last year. When there's no friction or pushback from the board, founders are denied a sounding board for their ideas. Altimeter Capital Management's Brad Gerstner. He's worked in the industry, the technology industry, for 25 years, investing in both public markets and venture capital. He sent an open letter to Meta's Mark Zuckerberg and the board of directors. In that letter, he outlined 3 recommendations to right the ship, pointing out that the core business is one of the largest and most profitable in the world, worth over $45 billion in operating profits last year alone. But its investment in the metaverse and unproven alternate reality is damaging the company potentially beyond repair. He laid out 3 sensible fixes. Reduce headcount expense by at least 20%. Reduce annual CapEx by at least $5 billion from $30 billion to $25 billion. And finally, limit investment in the metaverse and reality labs to no more than $5 billion per year. He's not telling them to end the project, just to rationalize it. The point isn't that these are necessarily the best ideas or that Mark should absolutely follow this path. But shareholders now understand no matter how far this stock goes down, Mark is beholden to no one, and there's little the board of directors or shareholders can do about it. Other visionaries didn't take this path. Arguably, Apple founder Steve Jobs was one of the best CEOs in a generation. The iPhone, some might call this the device of the century, has changed our lives. He didn't have super voting shares. In fact, at one point, he was fired. 17 years later, he returned to Apple as CEO, and of course, the rest is history. Meta, Alphabet, and Snap effectively don't give you a vote, at least not one that matters. And for now, we'll follow whatever path the founders choose. But you do have a vote. Do something about it. Cast your vote. Buy stock in companies with a capital structure that makes sense. One where management and boards answer to the shareholders. That's you. If you like the pod or just want to be kept up to date on the latest breaking stories, hit subscribe. And please post comments, good and bad. I need the feedback. Thanks for joining. I'm David Nelson.